So first of all, thank you for having me here. And I know a number of the staff have already come in and participated in this conference. And I do see a number of our staff sitting here today. So if you've not had a chance to get to know the staff and speak with them, I do recommend that you do so. Engagement outreach is a key priority for us. We have been busy, and I think what I would add is hardworking and extremely dedicated staff. We would not have accomplished even a quarter of what we've done in the past year without that. And one of the things that was really striking for me is how the entire division comes together to get our work out. I'll give you one example, our Investor Experience Initiative, which is one of our priorities. So that one, if you think about it, that had a request for comment. Believe it or not, that was drafted, driven by our Disclosure Review Office, not our Rulemaking Office. Our Rulemaking Office obviously participated and provided its expertise in rulemaking. Our Rulemaking Office, if you move to that one, in the Investor Experience Initiative, they had the Variable Annuity Summary Disclosure, including the summary prospectuses. They have the Standards of Conduct, which had obviously a disclosure component. Our other rules have disclosure components like, the ETF proposal. So our rulemaking was very busy in the investor experience. Our Chief Counsel's office, also obviously participated in investor experience. They participate in every single rulemaking, bringing their experience to bear in all of these matters. They also issued, for example, a really very important no-action letter for the protection of senior citizens who could be subject to financial exploitation. They also actually were our key coordinators for the roundtables for the Standards of Conduct. So that was just Chief Counsel. And then you take our Analytics Office. We do everything with data today. And one of the key things they did was the Investor Experience team that did the request for comment, they came up with what we call the feedback form, and you may have seen that in a lot of our rulemakings, including the Standards of Conduct for this form CRS, the variable annuity disclosures, so and for the request for comment, obviously for investor experience. So they came up with that form, but that was sort of a handwritten type form. Well, somebody had to figure a way of collecting that information and being able to analyze it, quickly and efficiently. That was our analytics folks. So every single part of the division comes together to get these initiatives out, and I think that's why we've been so effective and timely in so many of the things that we've done.
Well, that's a really great start. And speaking about the staff, we are really grateful that so many staff of yours come and speak to this audience. It's very important for us to hear from them, and we know you don't have to do it, so we're very, very grateful for the time. And yesterday, in fact, Sarah Tensitov, who heads up your rulemaking office, was here, and she talked about the Standards of Conduct a little bit. So why don't we start there? And I'd like to ask you sort of what your thinking is on what you found surprising, or what has most resonated with you from the whole, I think it's around 6,000 comments that I think you've received.
Yeah. So the Standards of Conduct rulemaking is several components, as you all very, very well know. It's got the regulation best interest, and that is led by our colleagues in the Division of Trading and Markets, and we provide support. Investment management, we led the recommendations for the relationship summary form CRS, as well as the interpretation for the investment advisor federal fiduciary standard. And yes, we got over 6,000 comment letters. In addition to the comment letters, we've had 7 roundtables, and the transcripts for those roundtables are in the comment file. We've used the feedback form as well, and we've had the RAND investor testing. And before that proposal, we have had a lot of investor testing and really a lot. The file is rich. We are rich for that file. When I look at the comment file, there is not one interested party that has not participated. You have obviously investment advisors and broker-dealers, but you also have lawyers, lawmakers, regulators, professors, you have investors. Everybody has participated and given us their opinion about various aspects of the package, the proposed package, and we truly are richer for it. The engagement when I talk about engagement and outreach, it really is important because you need to have that discussion, you need to have that dialogue, you need to have people tell you where you got it right, where you got it wrong, where you could get it better. And so that participation in this rulemaking and the comment letters we have received have really been extremely helpful to us as we work towards getting a final recommendation to the Commission.
Yeah, and we, the IAA, we were particularly pleased that you put the interpretation out for notice and comment. We thought that was very important, and we appreciated that and had much to say about it. So this may be a difficult question about the place of whatever rule the SEC comes out with in the sort of landscape with the Department of Labor, with the states, with the state insurance regulators. Can you maybe talk to that a little bit?
Sure. So one of the things the chairman has spoken about since the beginning, the launch of this project, has been the importance of consistency. When I'm an investor, when I look at my portfolio, I'm just looking at the ins and outs of my portfolio. I may not necessarily know or realize how many regulators can touch this portfolio, how many regulatory structures can touch my portfolio. And that has cost to it. And the cost eventually runs to the investor and the investor's bottom line. So, the chairman has talked about consistency and the importance of consistency in that regard. From our perspective, we have and we continue working very closely with our, with our peers, our colleagues in the different agencies that you have mentioned. We do feel we've had relationships with them for on this project and otherwise, for a very, very long time. And we do feel that we have a really good, strong, collaborative relationship. So, we for our perspective, we will continue working on providing the Commission with a final recommendation, and we will continue having dialogues with our fellow regulators.
Okay, well, let's switch gears a little bit then and talk about the rulemaking agenda of the Commission and your agency's involvement in it. So one of the other things that we've appreciated is the Chairman's commitment to having the regulatory flexibility agenda be accurate and actually signal real intent to the industry. And so there are a couple of items that we were very pleased to see on that and that are really core to the compliance folks in the room. And it's sort of custody, which is longer term, advertising, cash solicitation, and a couple of others. But why don't we start with custody? A letter was sent out from your Chief Counsel's office to the IAA on Tuesday, I believe. And it addresses one of the issues that's been open since the Division's 2017 custody guidance on inadvertent custody. And Sarah talked about this a little bit yesterday as well. And let me start by saying how much we appreciate this letter and that we really feel that it is moving the discussion forward and that it is clearly signaling that this is an issue for rulemaking. So we very much appreciate that. But can you just talk to us a little bit about how you got here and where you think it's going and how it's going to fit into sort of custody rulemaking more broadly?
That's a great question. For me and I speak for myself, but I think generally also for my staff, we really like to be well informed before we put pen to paper. And we realized, so in 2017, the division did issue a guidance piece, and after it was issued, there were two issues that came up, the inadvertent custody, and I think we dealt with that one through a straightforward FAQ, but there was also the non-DVP, and the application of the custody rule to the non-DVP instruments. And through our dialogue and conversations, we came to realize that it's a space that we need better information about. We need to understand the instruments. We need to understand the risks. We need to understand what controls are in place today by advisors that are in this space to safeguard the assets, because any assets that you have, the risk of misappropriation is there. So we need to understand the controls in place. And we listed all the questions that we could think of, but obviously if there's something else that we haven't thought of, we'd appreciate the conversation about that. But the purpose of that letter that Paul Salupica issued to you guys is to get more information so that we are better informed, so that when we are able to move to the custody rule, when that comes to the short-term agenda, we would be able to formulate a recommendation that we feel comfortable about and that we feel that we understand the lay of the land. So I do encourage you to participate in that process to the extent that you are in this space and have information for us about this space. And the letter also was not just about the non-DBP, but also about the crypto assets and custody issues that could come up with respect to crypto assets. And we included that obviously because it has been a question that's been top of mind for a lot of folks that are trying to get into crypto assets, but also because when we think about the custody rule in our next iteration, I mean, unlike some of the other ones that we are working on, like advertising, the last amendment to the custody rule was really not that long ago. But the rule needs streamlining and work. When you have FAQs that are now longer than the release itself, and they continue coming in, then you do have to sit back and say it's a rule that needs some work, some thinking to make it easier to comply with and easier, frankly, to examine for. So, with that in mind, and also because we do want an evergreen rule, we do want a rule that we don't want to be able to have it issued by the commission and then start another round of FAQ after FAQ after FAQ, or have it be outdated as soon as the commission, votes on it. So that's another reason why we included the crypto asset space, because that is a space sort of that's more in the future, and we would appreciate thoughts on it so that we can produce that rule that is evergreen, hopefully.
Yeah, and it sounds like you're saying this, but let me just confirm. These are not the only two issues that you're considering for the long-term rule, right?
No, we will be looking at the custody rule holistically. These two areas we flagged and we put out the letter about because they're two areas that we would like more information about before we put pen to paper on these specific topics for a recommendation to the commission.
Great. So another short-term rulemaking is advertising, and that really is one that keeps compliance people up all night, probably every night. That and cyber, right? But we were truly excited to see that on the short-term agenda, and then it felt like hurry up and wait because of the shutdown. So where are you on that? When can we expect to see a proposal? Are you still interested in sort of hearing from folks pre-proposal?
Yeah. So it is in our short-term agenda. The staff is really, really hard at work, and we anticipate hopefully being able to present the commission with our recommendation in the very near future. So we are hard at work. Yes, we did have the shutdown. Yes, we did lose quite a few weeks of work. But I do have to say that the staff, when they came back, they really rolled up their sleeves and worked so hard to make up for the lost time. We have lost some time, but not in a manner that shifts our agenda in any shape or form in a significant manner. So they're hard at work on this one. Obviously, if you have an interest in coming in and talking to us about any aspect of advertising or cast solicitation, our doors remain open. They will always be open. Even obviously once we propose, they will be open. So we encourage that conversation and engagement. But this is another rule that we are looking. I mean, it was first done. When was it?
The 60s, early 60s.
Yeah, early 60s. Predated the internet. And it's one of those rules where we do realize that a significant number of advisors subject to that rule are also frankly broker-dealers as well. And if you have the FINRA regime is completely different, more up to date than our regime, I can appreciate the compliance challenges that would be associated with that. And not to mention, the current regime does not sync well with how the modern world works. Testimonials is one thing that we are looking at. I mean, I don't know about you, but one of the things I do when I go to Amazon Prime, for example, I'm always looking at ratings. I think it's just a normal thing that people do nowadays. And I think it's a factor or due to choice. We have so much choice in everything we're looking at that we do look to experiences of others. And so it's just how our current world works. And so the prohibition on testimonials, we understand how it can present challenges and not be in line with how folks just kind of currently live their lives. So we are looking at that. We're looking at modernizing the rule, making it compatible with the world that we live in today. And the team is, it's one of those rulemakings, by the way, that I did not come in saying I want to do advertising. I think within the first week I was in office, I had folks coming in and saying, we're doing advertising. And they were so passionate about it. And I can, the more I spoke with them, the more I realized why. I mean, it's just, you can't have a rule that disconnected from how the current world works. And advertising is one of them. And not to mention that to make it even livable, the multitude of no action staff statements out there, it is truly a patchwork quilt type of regulation, which is not good for us. And I really don't think it's good for any of you.
You've kind of touched on the importance of the investor experience and on investor expectations, and that is so obvious in the advertising rule, but it's really great to see that as a focus, and so maybe that's a good segue into talking a little bit about disclosure initiatives more generally.
Yeah. So disclosure, when I started my career, I started in the corp fin world. So as a securities lawyer, what I did was disclosure. I'm not going to say how many years I've been practicing, just a few. Disclosure is the backbone of our securities markets. The free, transparent, robust capital markets we have today, which are truly the envy of the world, it's made possible to a large extent by the disclosure system that we have, the robustness of that disclosure. I personally appreciate that disclosure serves different purposes. It's for the investor, it's for the markets, as in like market analysts and whatnot, and data aggregators. And I do appreciate that it's also, to fulfill your legal requirements. So I do appreciate all that. But we can't have one element overtake the rest. We need to always keep top of mind that disclosure is still supposed to serve the investor. And I find the disclosure that we have today, for retail products, to be really hard to parse through. One of the issues I have spoken about, and I'm pretty passionate about, is the alphabetical disclosure of risks. In the prospectuses, the requirement is to disclose principal risks, and I personally have a little bit of a hard time seeing how risks disclosed in an alphabetical manner conveys the principal risks of the funds. So disclosure is really critical, and we are working on, it's a key part of our investor experience. Another part of disclosure is that we are looking, and this is under the direction of the chairman, we're looking at all staff statements, including comments that we've been giving through our disclosure office, just to see if we are, again, if anything we have been saying or doing needs to be modified, supplemented, amended, et cetera. So that's another part of disclosure that we're working on.
So we understand something else that's on your plate, because there's never enough, right, is the a derivatives reproposal. What can you tell us about that?
So derivatives was proposed by the Commission back in 2015, and the comment file was pretty robust. I do have to say that it was, a lot of comments came in, but it really was mostly focused on one element of the proposal, as opposed to holistically, which is fine. I think we heard loud and clear the area that folks had the most concerns about, but it sort of left behind the other elements of the proposal. The staff is hard at work. It is one of the initiatives that is on our short term. We have had we're really fortunate that we were able to onboard a derivatives expert to help us with the rulemaking, because it's not an easy area, as I'm sure all of you know, unless you've been living, breathing that area for your career. So we are very fortunate in that regard, and we do hope to be able to repropose derivatives in the short term.
Good, good. So switching gears again, let's turn to the proxy debate. And the staff held a roundtable in November on proxy issues. And I have to say that we thought that you did an amazing job at keeping that roundtable well balanced. We really were impressed with how that kind of went forward. But what did you learn from the roundtable, and where do you think things are going?
So that roundtable had 3 different panels. I think that the panel that was I was interested in all of it. I sat through pretty much the entire roundtable. It was very the topics were really interesting, and the conversation was very robust and very respectful, which I thought was fantastic. That people really listened to each other on the roundtable. And I think that made it very successful, given the different interests that were represented on the different panels. The panel that obviously I'm most interested in is the proxy advisory panel. And we learned a lot, but I think if I may share just a couple thoughts. One is there was universal agreement that the role of the proxy advisor is important to making the system work. The value is there. It's a very high volume business, getting that data and whatnot. So, and advisors and other investors rely on that service. So we definitely heard that part loud and clear. But it was also pretty loud and clear that we need to update and think about some of the guidance we have in this space. And if you think about it, the rule was adopted back towards the end of 2003. And if you look at just the pure math, just pure numbers of where the asset management industry was, just as one example, in terms of AUM, and also in terms of, frankly, participation of funds in the corporate sector, in terms of the holdings of companies. If you look at that number back then, and you look at it today, it's a huge swing, a huge difference. So that participation is even more important now in the capital markets. The voice is more important now in the capital markets. So it is time. By the way, the chairman has spoken about retrospective review. So you should not sort of just set and forget, adopt it, and move on. It is important to look at things and see if, with the movements in the market, with the shift of time, if things need to be updated, if more guidance is needed, if something needs to be changed. So I think we heard both of these messages, the value, but also that there are some areas that definitely need some move forward.
Yeah, and I think what we're also hopeful for is that we know that the proxy advisory question is pretty politically charged, and we're hopeful that it doesn't sort of distract from the really important proxy plumbing sort of infrastructure issues, and that's part of what's sort of on the horizon as well. Turning to MiFID, so that's another place where you're asking for data. And we've been talking to our members now for quite a while, since you issued the relief on that, about the impact of MiFID and the sort of anticipated impact once the relief goes. It's hard to get data, I will tell you that. So can you give us a little bit more maybe guidance on what it is that you're looking for and how you're thinking about it?
That's a great question. And this is one of the reasons why we issued back in December sort of another call for data and analysis. And we do appreciate that it's not a simple ask. But we really, really want to understand the impact on different market participants. The buy side, the sell side, but quite frankly also, going down within each one, there are different types of firms, different sizes of firms, different research needs. So we want to understand the impact on different market participants in this regard. We want to understand the impact on research. And we have been getting some anecdotal data, but we really would like to get more information about the impact. For us to be able to make an informed, move forward, we do need to have more information. And that is why, when we first issued the letter that provides a temporary no action relief, we asked for information. We were not really getting that much information, and so we reminded folks in December that we really do need information. So that comment file remains open, and we do really hope that more folks participate in the conversation and let us know what they're seeing, what the impact is, what the potential impact is.
And so to everybody sort of in this room, I think just this week the IAA has sent out a survey, and we've been talking to our committees about it. But please let us know if there's anything you want to say about MiFID, and if you've gotten the survey, we really encourage you to take a couple of minutes and take a look at it and see if sort of we can help the division get to a good place on this. Data obviously is really important. We want it to be, wherever you go, it needs to be informed, and we completely agree with that. Sanjay, do we have any questions from the audience? Yeah, great.
So if we could go back to the interpretation on the fiduciary duty, the proposed interpretation. There's been a lot of debate about the role of disclosure as part of an advisor's fiduciary duty. What was the commission trying to clarify?
That's a great question. So when we were looking at the rulemaking, the standards of conduct, and we felt it was very important to be holistic. If we're going to be talking about the standard of conduct for broker-dealers, if you look at it, there isn't one place where the advisor's federal fiduciary duty is articulated. I think you have to pull it from a lot of sources. In fact, when we were putting together the interpretation, the proposed interpretation, that really was an exercise, pulling it together from the various sources over the decades where it has been covered. So we felt it was really a very integral part of the package to affirm, and in some areas clarify, what the federal fiduciary duty is for investment advisors. We've really appreciated the comments that we have received on the interpretation. I think one of the set of comments that have been really helpful to us is the set of comments that discuss the difference between an institutional versus a retail, and how the proposal did not sufficiently articulate that distinction, and where it would be helpful for the commission to do so. So that was one of several comments that we received that we thought was very, very helpful. But we really felt strongly that if you're going to have the standards of conduct for financial professionals, and that includes advisors and broker-dealers, it really would be important to pull in one place what the commission thinks of as the federal fiduciary duty.
Sure.
So Dalia, you talked a little bit, I think, about the disclosure initiative and sort of the focus on, I think, improving the quality of disclosure that investors get. Has there been any consideration as part of this initiative also to think about the amount of disclosures that firms are required to provide investors? And I think the concern is that investors will get so much and they'll stop reading it.
That's actually a great question, and one that's near and dear to my heart. Take the variable annuity proposal. That is one of the reasons why we put out the summary prospectuses, because right now people really, the volume of disclosure is really overwhelming. If I was to receive it, I'm not sure I'd be able to sit and read it and really digest it, because it's just too much. And most retail investors don't happen to be securities lawyers. So absolutely, there is a lot of information that's going out there. One tool is to provide summary information where that is possible, and hence why that proposal was recommended. And we are looking at other ways. One of the ways we're looking at is layered disclosure. You can start from the top and then provide layered disclosure as a roadmap. And with hyperlinks or other means, you can provide the investor with an ability to dig deeper as they work through the information, and they can stop where they want to. When I was on the staff many years ago, I happened to read a speech that, actually I was sitting in the audience, that Commissioner Stein at the time gave, and I really think she was ahead of her time in that regard, because she was speaking about layered disclosure, and how investors that want spreadsheets should be able to dig down to that level, but investors that just want the highlights, the key highlights, should be able to be given that information. And that really is a very, very important thing that we should all be thinking about. That disclosure does not need to be a 100-page document. You can have that 100-page worth of information, but present it in a way that enables the investor to choose how to get the information they need. And we are focused on that.
Well, we actually really appreciate that response. It is pretty consistent with sort of our comment on how we think disclosure, folks want to get disclosure and what makes the most sense. So we are out of time. Thanks again for joining us. I think this has been just a really great conversation, and it's always so valuable for us to hear from you, and hopefully you're getting some sleep, that it's not all work all the time. But thank you very much
Thank you. Thank you
being
for having
here.
me.